It started. Hello, everybody. Welcome. Tesla stock is down 3.4%, $254 per share. Overall markets are down as well. S&P 500 down 0.5%. Dow Jones is actually up, interestingly. Nasdaq is down 1.4%. Russell 2000 down 1%. Crude oil is up 3.5%. That's amazing. Crude oil is up 3.5%. My only long position, Oxy, is up 1.2%. It should be up more than this on the oil price going up so much. Um, hmm, Interesting. I'll take a look at that later. All right, let's see what else. Nvidia is down 4%. CoreWeave is down 8%. CoreWeave is down 8%. I think the importance of this IPO is really underestimated. No one is talking about this. And it's very unusual for an IPO to fail like this miserably. So we're going to take a look at that in a little bit. Um, let's see what else is new here. Looks like the markets are turning down again. This is very much a tech-driven downward spiral. I think we're just at the beginning of it, honestly. But Tesla in the last week is down 8, Amazon down 7, Microsoft down 5, Nvidia down 13%. Broadcom is down 14%, AMD is down 11%. All the chip sector, the entire chip sector is down in the last week. Yeah, that's wild. Across the board. And yet, in my opinion, it's still the most overvalued sector in the most overvalued equity market in the world, or really the asset class, maybe except for crypto. Let's tweet that out. AI bubble has popped. Cool. And we can pin that here. All these replies I get are hilarious. All right, let's pin this up here. All right. Trump eyes third term amid constitutional debate. I mean, this is just this circus is getting even more comical. Former President Trump has expressed that he is not joking about the possibility of running for a third term, despite the 22nd Amendment of the United States Constitution, which limits a president to 2 terms. Legal experts have debated the interpretation of the amendment, suggesting that while Trump cannot be elected for a third term, he might be able to serve a third term through other means, such as succession. Public reactions vary, with some seeing this as a potential constitutional innovation, while others view it as a power grab that disregards the Constitution. I think most people see it as the latter. I don't think anyone sees the innovation because the Turkish government did the same thing. Erdogan has been in power since 2002. It was 23 years. And although some Trump supporters would like that as well, that's just not ideal. I mean, we see where Turkey is today. So I hope that doesn't happen. Gold soars past 3,100 amid tariff uncertainty. We're going to get some news on Wednesday, I suppose. I think Trump will probably be talking for the next 72 hours about tariffs. So it will be up and down based on tariffs. But I actually think that the CoreWeave IPO failing is bigger deal than tariffs. I think CoreWeave IPO failing is a really massive deal. It's really underestimated its importance, in my opinion. We're going to talk about that. Right now, the CoreWeave stock price is down 9% at $36.59, and it's looking weak. Volume of only 9 million shares. So it's going to, let's call it 10 million. You're looking at $360 million traded on a $17 million company. Is that right? That's nothing. That's very thin volume. That's a really thin volume. I look to short the company, but there are no shortable shares right now. So I thought that was interesting. And options, you can't do options on this for a few weeks. So if it's this weak, if it's so weak, despite that, um, I think this company might be worthless, and I think that may happen very soon. And this company was valued at $35 billion. $35 billion, and as it just about a month or two ago. So if $35 billion in private markets doesn't really exist, which is what the public markets are saying, what does that mean about the hundreds of AI or maybe even thousands of AI companies that are sitting on venture capital books? This can be a massive bubble popping, and it could happen in the next few weeks, maybe a couple of months, I think. I think this CoreWeave IPO failing so miserably, which we're going to look into in a little bit, could be the pin that pops the AI bubble in a really massive way. Um, if anybody has any AI related investments and you're looking at this ticker and you're not rushing for the sell button, I don't know what to tell you. But who knows? Maybe I'm wrong. Maybe I'm wrong, and maybe you shouldn't panic. Anything is possible. Anything is possible. Audio is good on YouTube. Thank you very much for letting me know. Um, let's read our usual Reuters article here. Damn, this is crazy. Look at Microsoft, 5.6% down in the last week. That's wild. I wouldn't touch anything AI related right now with a 10-foot football. Okay. S&P 500, Nasdaq drop as tariffs spark recession fears. But hey, who knows? Maybe in June, Teslas will be driving themselves, as Elon said. The S&P 500 and Nasdaq fell on Monday, with technology stocks leading declines as investors. Actually, when I say Elon says, I should just pin this up here, just for context. As the S&P 500 and Nasdaq fell on Monday, with technology stocks leading declines as investors steer clear of risk-laden assets on worries the Trump administration's upcoming tariff plans will hurt economic growth. Global stocks tumbled, gold prices scaled new highs, and U.S. government bonds climbed after U.S. President Trump said on Sunday that reciprocal tariffs he is set to announce on Wednesday will include all nations. So yet again, this is, I think, I lost count at this point how many times he changed his mind on this thing, but he's going to change his mind a few more times, create volatility, and maybe pump a few cryptocurrencies of his own. The Reuters Tariff Watch newsletter is your daily guide to the latest global trade and tariff news. He has already imposed tariffs on aluminum, steel, and autos, along with increased tariffs on goods from China. There's a lot of uncertainty related to Trump's announcement, said Mark Lucchini, chief investment strategist at Janney Montgomery Scott in Philadelphia. Many industries have begun to feel the impact of the tariffs that have been announced and are making assumptions about what's likely to follow. Yeah. Yeah, inflation is going up. Inflation expectation has surged. Even the longer run inflation expectations have moved up a little bit. And now we're seeing credit worsen as well, even in the public markets, which, if CoreWeave is any indication, private credit is already gone. Let me see for a second. Good question on private credit. Private credit. So CoreWeave apparently is borrowing money, um, backed by the GPUs it's buying from NVIDIA and renting the NVIDIA GPUs out. But as we know, Hopper GPUs are losing value at a very rapid pace, depreciating at a very rapid pace. So the collateral backing that debt is depreciating at a very fast pace. So what happens to that debt, and who's loaning that debt? I think it's one of these, some of these private private lending. The U.S. private credit market has experienced significant growth over the past decade. As of early 2024, estimates of its size vary, with figures ranging from approximately 1.1 to 1.5 trillion dollars. Wow. This expansion is projected to continue, with forecasts suggesting the market will reach 2.8 trillion by 2028. I don't think so. Second response, of course, I prefer the later. As of early 2025, the U.S. private credit market is estimated to be around 1.7 to 2 trillion dollars in size. That is wild. That's wild. Private credit, also known as direct lending, refers to loans made by non-bank institutions like private debt funds directly to companies, often mid-size or private. The market has grown rapidly over the past decade, especially after the 2000 financial crisis, as banks pulled back from lending and investors looked for higher yields. AUM globally exceeded $1.6 trillion, with the US accounting for the majority of that. Okay. Investor demand for yield in a low interest rate world. Companies prefer quicker, less regulated lending that banks offer. Rise of private equity, which often use private credit to finance buyouts. We haven't had many buyouts. All right. So $2 trillion at stake here. Okay. Let's continue with our article here. The three major US indices are on track for sharp monthly and quarterly losses, poised for the steepest quarterly drops in 3 years, S&P 500 and NASDAQ. It says NASDAQ is tech centric, but I mean, S&P 500, most of the top 10 companies are tech companies. Tech stocks were the worst hit, with Nvidia falling 3.9%, Microsoft down 2.2%, as investors worried about companies' AI spending plans. Tesla fell 4% after Stifel lowered its electric vehicle maker's delivery forecast ahead of Wednesday's first quarter report. S&P 500 consumer staple sector, which considered as a safe haven with stock within stock markets, rose about 1%, while the energy index jumped 1.3%, tracking the jump in crude prices. We're going to look at the crude price jump. Domestically focused Russell 2000 was down 2.4%. The CBOE volatility index jumped to a 2-week high of 22.44 points. Yeah, I think it was higher before that, earlier in the day. As a result of tariff uncertainties, Goldman Sachs raised the probability of recession to 35% from 20%, cut its year-end target to 5,700, and forecast more interest rate cuts by the Federal Reserve. Not going to happen. Focus this week will also be on economic data, including ISM business activity surveys and crucial non-farm payrolls report. Also due this week are speeches from several U.S. bank officials, including Jerome Powell. Interesting. Drug maker shares slid after reports of the US FDA top vaccine official had been forced to resign. Moderna dropped 9%, while Pfizer fell 1%. Gene therapy companies fell 25%, 12%, respectively. Okay. Pretty wide sell off. Not much news. Maybe we can keep this low. Oil prices climbed 2% to 5-week high on Russia, Iran supply worries. Oil price climbed about 2% to a five-week high on Monday, on worries supplies could decline if US President Trump follows through on threats to impose more tariffs on Russia and to possibly attack Iran. Brent futures were up 1.5%. WTI rose 3%. That put Brent on track for its highest close since February 24, and WTI on track for its highest close since February 21. Brent's premium over WTI fell to its lowest level since July 2024. Analysts have said that when Brent's premium over WTI falls below $4 a barrel, it does not make much economic sense for energy firms to send ships across the ocean to pick up US crude, which could result in lower US exports. Interesting. Trump said on Sunday he was pissed off at Russian President Vladimir Putin and will impose 25 to 50% secondary tariffs on buyers of Russian oil if he feels Moscow is hindering Trump's efforts to end the war in Ukraine. Trump's threat on secondary tariffs on Russia and Iranian oil is a factor oil market participants are tracking. Thinking three times. Come on. Kremlin said on Monday that Russia and US were working on ideas for possible peace settlement in Ukraine. China and India are major buyers of Russian crude, and their acquiescence would be crucial to making any secondary sanctions package seriously hurt exports from the world's second largest oil exporter. Trump also threatened Iran on Sunday with bombing and secondary tariffs if Tehran did not come to an agreement with Washington over its nuclear program. Iran's supreme leader said on Monday the US would receive a strong blow if it acts on Trump's threat. Some analysts believe that Trump may not act on his threats, a view that is putting a cap on oil prices. IG analyst Tony Kamor said the market felt Trump would not follow through. If enacted, he said the tariffs would be another step toward a trade war that would weigh on global growth and demand for crude oil. On Monday, several Chinese traders were unfazed by the latest threats. Three who spoke with Reuters all said Trump's constant brinkmanships meant they discounted what he said. We expect WTI to stay in the range of 65 to 75 for now, said Yuki Takashima, economist at Nomura. I don't think so. Elsewhere, talks to restart Kurdish oil exports through the Iraq-Turkey pipeline have hit a snag as the lack of clarity over payments and contracts persists, two sources with direct knowledge of the matter told Reuters. Another move that could limit world oil supplies, U.S. authorities notify Spanish oil company that its license to export oil from Venezuela is to be revoked. In China, the world's second biggest economy, manufacturing activity expanded for the fastest pace in a year in March, a factory survey showed on Monday, with new orders boosting production. Also, by the way, I was just watching Line daily update, and they say EVs lost share in China. So EVs market share dropped in China in the first 2 months of the year, which is really interesting. On the other hand, the hybrid sales have tripled in recent years. So I think hybrids are really capping demand for EVs. I don't think people really want to be, most people don't feel ready to go full EV. And I don't know what's going to change that. Chinese companies are now hyping up 1,200 kilowatt chargers, 1,500 kilowatt chargers coming soon in China, two different companies. And we haven't heard anything from Tesla on that front. The other thing I want to look at is CoreWeave, maybe a bit of a history of failed IPOs. What are the biggest failed IPOs in recent decades? WeWork, 2019, pulled IPO, valuation before IPO 47 billion. SoftBank backed. Outcome never went public as planned due to concerns over corporate governance, massive losses, and CEO's erratic behavior. Aftermath eventually went public via SPAC in 2021 at a $9 billion valuation. Wow, that's crazy. So they pulled the IPO in 2019, and then 2 years later, when there was a huge bubble in markets, SPAC bubble, they went with $9 billion, filed for bankruptcy in 2023. Facebook, valuation at IPO, $104 billion. This is 2012. Outcome, the IPO was plagued by technical glitches on the NASDAQ and overvaluation concerns. Stock fell 50% within months. Recovery became one of the most valuable companies in the world, but early investors took a hit. I need to see the Facebook chart here. Let's see. So even IPO is at $38 per share. I guess the split is just if they split. In the first week, down 16%. In the first 2 weeks, down 27%. Went down almost about 30% and then started recovering. And then it went down again. So this is 2012. 2012. And then crossed back above IPO price in a little more than a year, and then never looked back. So the first few months were down as much as 50% from May 18 to October 19, to June, July, August, September, 5 months. Interesting. Okay, so that's Facebook. We had WeWork. We talked about Facebook. Uber. Valuation at IPO. Oh, what is colorful? All right. Uber IPO 2019, valuation $82 billion. Outcome price at the low end of its range. Stock dropped 7% on the first day, one of the worst openings ever for a large IPO. Yep. Eventually recovered and became profitable, but the rocky debut cast doubt on growth over profit models. Well, I mean, 2019 was a tough year. You know, you can see with the WeWork, Uber IPOs, it was a tough year for the markets, especially the beginning of it. Blue Apron 2017, valuation at 2 billion, but that's a small one, so that doesn't count really. Faded within months due to high marketing costs, lower customer retention, blah blah blah. Robinhood valuation at 32 billion. This is 2021. Retail fueled IPO flopped as concerns over monetization and regulation hit. Lost over 70% of the value within a year. Still public, but far from IPO highs. Is that right? Robinhood. Let's see. No, it's back up to IPO prices. So ChatGPT, of course, a little dated information here. So we have a couple examples of IPOs this big failing and then recovering pretty fast. WeWork never recovered, but Facebook did after dropping 50% within the first 5 months. And then Uber dropped a bunch. Let's look at that Uber stock. That one dropped about 35-40% from the IPO price. And then, but that was 2019, like May 2019. That was a really rough period. Bad timing on that one. Robinhood, they IPO'd at peak. Deliveroo, 2021 UK, 7.6 billion pounds. Outcome plunged 26% on day one. But that's UK market. That doesn't really. The worst IPO in London's history. Okay. Rivian, 2021, $86 billion, higher than Ford and GM at the time. Crashed over 80%. They sold at the top. Like I wouldn't call that a failed IPO. Let me see if I can fail, redefine this fail. The Tech Globe, theglobe.com, 1998. Day one gain 600% plus, one of the biggest ever. Collapsed hard. And Deliveroo, 2021, day one dropped 26%. Robinhood dropped 8% on day one, dropped further on day two. And Facebook, Uber, day one, -7%. Worst first day dollar loss ever at the time for a US IPO. Okay, so that can be our boogie. Reverence Ravens Therapeutics 2014. Day one dropped 25%. Biotech IPO, rare for that sector. Weak trial data for its Botox rival. Zynga 2011. Closed up 5% day one. Day two through five slid sharply. So this IPO, so Zynga showed up as number 7 as a failed IPO, and CoreWeave closed at the exact same price as the IPO price, 40 flat. So not curious at all. So that's worse than Zynga. First data, day one, -1%, 2015. One of the largest tech IPOs of the decade, $2.6 million raised, and still dropped. Market rated as over leveraged and low growth. Okay. Yeah, this Corby definitely going to be historically one of the failed IPOs, obviously. I would put it top 10. Top 10. Especially, I think this is going to be one of the companies that goes bankrupt, like a Rivian IPO or Blue Apron IPO. As opposed to, or WeWork IPO, as opposed to Facebook, Uber, etc. Uber stock. Um, so Uber is not even 100% return in the last 6 years since the IPO. So I don't know if you would call that a failed IPO or, I mean, I guess it's not. I mean, the company survives, $150 billion global company. That's not a failed IPO. But buying shares on the IPO, you would have left money on the table if you had just bought S&P 500, I think. Right? Let's see. May 2019. Yeah. Um, yeah, exactly. Especially with the dividends and stuff. And so CoreWeave is way worse than any of these, really. Kind of the size of WeWork, but that was 2019. Facebook IPO 2012. That's an ambitious IPO at $104 billion. That's amazing. Okay. CoreWeave is pushing lower, even. I mean, right now, the syndicate of investment bankers is probably trying to hold it up. And that may last for a few weeks. And if in day two, this is kind of getting out of control, thinking below the IPO price by 10%, that's pretty wild. And my understanding is that this company has, Hopper GPUs mostly, because Blackwell just started shipping. So, and NVIDIA's CEO tells us that Blackwell GPUs make Hopper essentially worthless. He says you can't give away Hoppers when Blackwell comes for free, basically. So, what does that mean about the collateral that's backing the debt of this company? It means it's worthless. Now, I don't think it's worthless because Tesla still uses A100s at its California facility. Um, I mean, you're not going to change the world with A100s, but I guess still have value if they're still working. So I think the Hopper GPUs will have value for a few years. It's just that I think they're depreciating more than this company is able to pay back its debt is kind of the problem here. So their balance sheet could be underwater here. And I don't think CoreWeave is the only company that did this, that bought NVIDIA GPUs to rent them out. There's apparently a bunch of cloud providers that kind of do their own flavor of um, cloud services, and they all go to NVIDIA, obviously. So NVIDIA's customer concentration could be even more than I thought. So we always talk about these kind of Amazon, Google, Microsofts of the world, but there's also companies like this one, CoreWeave, that buy hundreds of thousands of GPUs from NVIDIA. So it could really be 5, 10 companies who either, like Microsoft, choosing to not buy as many or not pay up the extreme margins that NVIDIA has been charging, or literally going bankrupt. So they can't even buy because they're losing the backing from private equity, private lending. So I think we can see demand for NVIDIA GPUs really vanish if it hasn't already. And I think the NVIDIA management knows this. I don't know what the chart Jensen put up on his recent during his recent talk really showed, because there was no axes and not much detail provided. It could just be placeholder orders. I don't know, but he showed an increase for Blackwell orders. But I have no, like, what, over what duration, over how many years, like how, what are the absolute amounts? He didn't even show a y-axis. It was so shady. And then the CFO on the last call, when asked if margins are going to bottom this upcoming quarter, she avoided the question. So that tells me it's probably not going to happen. So we have a period in the next couple of quarters where NVIDIA's margins will decline, revenue growth will decline, and could even turn negative. So if you have negative top line growth, decline in margins, you're probably going to have negative growth in your profits as well. And so what does that say about NVIDIA's PE ratios, PEG ratios that everyone have been hanging their hat on to keep buying the dip? On top of that, there's tremendous leverage in the NVIDIA stock. Lots of retail dip buying in recent months with leverage ETFs, with call options, etc. So I think NVIDIA can drop really fast here because of this CoreWeave IPO. If this continues for a few more days, if CoreWeave IPO continues for a few days, there is no way, mark my words. Actually, I'm trying to just let me remember this name of the space. Tesla will triple in 2022. Okay, I'm going to change my words. There's very little chance that Nvidia stock would remain high, would remain above $100 per share. And I think that it might actually drop to $50 per share in the coming months. It's a possibility. So, all right. The other thing I want to look at is consumer confidence from last Tuesday. I'm going to read that. If there's no questions or comments on any of this, we can dig into a little bit more macro data. So market check, Tesla stock is down 3.5%. Crude oil is up 3%. Um, I don't see much news today. Chicago PMI came out. We can look at that a little bit too. Yield curve is down quite a bit. I think the 10-year Treasury was down to like 420 in the morning. It recovered a little bit. People are expecting. There's some people who are expecting a rate cut in May. It's not going to happen. The probability that happen is maybe 1%, less than 1%, definitely less than 1% in my mind. So the only way it would happen is if the market's just plunged, like COVID. Equity.
Yeah, so I was thinking, what do you think are the chances of Wall Street trying to pump to IPO a bunch of companies that aren't making much profits just with like AI in it? Because that's what I was expecting. I wasn't expecting it to pop this quickly because it looks like it's declining. What do you think?
I think markets. I think people wisened up after 1999. I don't think. I think it's pretty obvious at this point that these AI companies are not generating any profits, and I don't think there's a credible pathway to any of them generating profits in the near term. OpenAI, in my mind, OpenAI could be profitable several years down the line, but not anytime soon. Um, they're also, I think, slowing down their inference too. Like they're really, you asked the question, it's taking some time. Even the basic models, foundation models, are taking some time to answer the question now. This private credit lending drying up is a big deal for the markets. It's a very big deal because that's the kind of stuff that's been fueling these GPU purchases at 80% gross margins. And also MicroStrategy's billions and tens of billions of dollars of purchase of Bitcoin as well. So this private credit can really come down really fast, you know? It can't like I heard somebody say to me the other day, I'm like, we don't have a credit bubble. I'm like, are you not paying attention? People are kind of looking at people are just looking at the regular, usual suspects like public markets and credit spreads and everything, but the markets are changing. You know, what worked last time is may not work this time. So there's clearly an issue, an overvaluation in private markets right now. If they think they can bring a company to public markets at $35 billion, and it ends up being $17 billion in a matter of a month, and it's headed lower. Like this company is definitely headed lower. It's going to be worth less than 10 billion. Mark our words. It's going to be less than 10 billion by the end of April. Exit.
So, have you seen the new OpenAI image generation that just came out? It's
Yeah.
actually it's quite useful and it's fantastic, to be honest.
Hmm.
So I would pay money for that. So, but I don't know if it's if they make any profits. But I was shocked how good it is.
Do you not subscribe to ChatGPT?
I, I do, but I would pay a lot of money for the last feature, to be honest, because I work into the advertising industry and stuff. And I mean, it can save us a ton of money. The last feature, it's really good. I have to send you some links.
Hmm. All right. Trump's Liberation Day remains shrouded in mystery. Yeah, it's so crazy that we have 2 days left to Wednesday and we don't really know what's going to happen. That's so wild. Max 7 sink again in jittery tariff countdown. Apple is up 1%. Micron down 3. Lennar continuing downward after the bad earnings report last week. Nike still down. That's crazy. Nike keeps going down. Nvidia down 3.5%. No. Bitcoin is at $83,800. All right, consumer confidence. Actually, I'm going to move it down. We're going to do this and then we're going to call it a day, I think, unless there's any questions. Um, Somebody in YouTube Live says, "Greetings, Diama. Would love to hear a discussion on Musk's public admission that he's aware that his political activism is destroying shareholder value. He's in breach of his fiduciary duty to shareholders, admitted it in his Wisconsin town hall." Uh, yeah, good luck. Good luck in the courts. He clearly gets away with anything he can say. It doesn't really matter. He's got the best lawyers in the world. You can sue him, but you're not going to get much out of him. All right. The consumer confidence survey reflects prevailing business conditions and likely developments for the months ahead. This monthly report details consumer attitudes, buying intentions, vacations plans, consumer expectations for inflation, stock prices, and interest rates. Data are available by age, income, 9 regions, and top 8 states. Consumer Board Index fell 7.2% points in March to 92.9. President Situations Index, based on assessment of current business and labor conditions, decreased 3.6 points. Expectations dropped 9.6 points to 65, the lowest level in 12 years, well below the threshold of 80 that usually signals a recession ahead. Yeah. Yeah, there's a lot of indications that we might already be in a recession, actually. I mean, I'm a little surprised that the recession probabilities are still around 30 to 40% as opposed to more than 50%. I don't think Wednesday can change that. Like, even if Trump came out and said, you know what, I changed my mind, no tariffs to anybody. Or let's say all the countries come together and say, you know what, we're going to hold hands and announce to the media that no more tariffs in the world. I don't know if that's going to change anything. Consumer confidence declined for a fourth consecutive month in March, falling below the relatively narrow range that had prevailed since 2022, said Stephanie Guichard, senior economist, global indicators at the conference board. Falling below the relatively narrow range that had prevailed since 2022. Interesting. Of the index's 5 components, only consumers' assessment of present labor market conditions improved, albeit slightly. Views of current business conditions weakened to close to neutral. Consumers' expectations were especially gloomy, with pessimism about future business conditions deepening and confidence about future employment prospects falling to a 12-year low. Meanwhile, consumers' optimism about future income, which had held up quite strongly in the past few months, largely vanished, suggesting worries about the economy and labor market have started to spread into consumer assessments of their personal situations. March's fall in confidence was driven by consumers over 55 years old, and to a lesser extent, those between 35 to 55 years old. By contrast, confidence rose slightly among consumers under 35 as an uptick in their assessment of the present situation more than offset gloomier expectations. Decline was also broad-based across income groups, with the only exception being households earning more than $125,000 a year. Senior economists added, likely in response to recent market volatility, consumers turned negative about the stock market for the first time since the end of 2023. In March, only 37% expect the stock price to rise over the year ahead, down nearly 10 percentage points from February and 20 percentage points from the high reached in November 2024. On the flip side, 45% expected stock prices to decline. Right? Consumers' view of their family's current financial situation improved slightly, but their expectations for future finance declined to the lowest level since July 2022. Okay. A special question about how easy it is for consumers to form expectations about the future found considerable self-confidence among consumers in assessing their own future income prospects and family financial situation. However, forming expectations about broader economic trends appeared more challenging. Over one-third found it difficult to assess the future. On a 6-month moving average basis, purchasing plans for both homes and cars declined. Surprisingly, given the anxiety about the future, intentions to buy big ticket items, including appliances and electronics, ticked up, which may reflect plans to buy before impending tariffs lead to price increases. Yeah, so there's also the possibility that some demand has been pulled forward, especially on vehicles, from April to March, or let's say Q2 to Q1. So we did actually see a bit of an uptick in vehicle demand in recent weeks. Tax refunds have been a little higher than before, I think about 6% higher than last year. Also, 1% more tax refunds were issued this year than last year. So combined with these tariff speculations, I think people might have rushed a little bit to buy in March, February and March. So we'll see what that means for April and May. Like that could really result in April and May, especially if tariffs come about. We could really see a big slowdown in consumer spending in Q2. Consumers' overall intentions to purchase additional services in the months ahead were little changed, but their priorities shifted. Fewer consumers plan to spend more on movies and live entertainment or sports, and more plan to spend on outdoor activities and travel. Vacation plans also increased. See, that's not what I'm seeing. That's not what I've seen on data. I'm seeing vacation plans sold. So interesting. Hmm. Let me think about that. Comments on the current administration and its policies, both positive and negative, dominated consumers' writing responses on what's affecting their views of the economy. Writing response also showed that inflation is still a major concern for consumers, and that worries about the impact of trade policy and tariffs in particular are on the rise. Okay. Perceived likelihood of a US recession over the next 12 months, somewhat plus very likely, is up about 67%. Hmm. Man, consumers are so much more gloomier than bankers. Okay. All right, so that's that. Core weave is at $36.28. Man, look at this chart. This is crazy. For the first time it hit $36 per share was this morning. And since then, it's been trying to bounce, but failing every time at a lower price. And now, in the last hour or so, it's flat to $36.20. Like a 1 cent difference between this is highs and the lows. This is crazy. They're really trying to hold on to this stock really hard. I don't know what's going to change here, but if this IPO continues to go down, say 10, 20% like this per day, Nvidia plunges. If Nvidia plunges, semiconductors plunge, and that can bring down the entire house of cards here. I think we might be really close here. I mean, I don't want to cause alarm, but these are my genuine thoughts. I think that we might be close to um, accelerating declines in the markets, whatever the stock is. I'm sure some people are waiting to make a decision for Wednesday. Trump said that it's going to be across the board and all that stuff. They said it's going to be less. This is going to be more. I don't know, but I think there's going to be something. Like there's going to be some tariffs at a minimum. They have to raise hundreds of billions of dollars to achieve their goals. So, and they're not cutting anything, and they're proposing more tax cuts. If he can't implement tariffs, if he can't raise several hundreds of billions of dollars of tariffs, he can't extend the cuts. I mean, that's a given because cutting efforts basically failed as was predicted. So, all right, let's call it a day. Thank you very much, everybody. And I'll chat with you all next time. Take care.